Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 5th of July and we are starting with our charts. But before starting, I will just tell you a recession in Europe is just becoming a reality. That's why people are just rushing to sell everything related to euro and stock markets. That's really happening fast. And then we will just see in the charts on that one. All right, let's start with our first chart. Euro dollar is testing 20-year lows, and this level has not been seen since November 2000. So actually it's 22-year low levels. So as you can see here, it's really low, and a lot of people are just betting on that, and euro will just become, if the recession just become a reality, $1 to €1, that will be possibility. But dollar index is rising so fast, it should end up, because otherwise also it will be a big trouble for US markets. Just remember a dot-com bubble, it was the highest level of dollar index, and then after that it has tested 20% lower level of that one in just 1 year. So this is not good for global economy. The balance should be, even if there's a decline, it should be in time, not on just 1 day, because it's called a lot of volatility in the market, and then it just scare all the investor, and it may turn to just a safe haven asset, and then volatility can go away. That's my opinion. All right, but for if you just ask me here, it's the really best time to buy euro dollar. That's my prediction, because even if you just a test $1 to €1, it's not happening in just 1 day. Today it already declined, as you can see here, from 1.04 to 1.02, even getting closer to 1.01. So this is something kind of a period, not a day. So this may just make some bounce in coming days, and this level can be a new kind of resistance for euro dollar. That's unfortunately, as you can see here, a step, another step, and we see another step in this one. All right, this is possibility. All right, let's start with let's go on with our second chart.
You are ready to win with us, GAN Markets.
All right, as you can see here, crude oil is also on decline. What's happening in that? It's recession. If recession happens in Europe, that means people will not buy stuff. So if they don't buy stuff, then China and US will not need that much oil, that much transportation, that much energy. So why it was rising? Because they were saying that, all right, because of this high demand. But if people don't spend, there was no demand, then there will be supply, and they will say this time, all right, maintenance, blah blah. But at the end of the day, people will just realize that it's a fake, it's a lie. That's the thing. So as you can see here, we are just seeing a big decline, a sharp decline, and this level. First it just passed this level, now this level, and definitely we are forgetting this high level of US oil and Brent oil as well. We are forgetting the highs, and recession reality is becoming really big reality, and we see that. All right, let's look at our last chart. All right, our last chart is DAX index. So why testing this level? Let me just show you this level. This level is on the 4th of March, lowest level in DAX index. So after just the start of invasion of Russian invasion to Ukraine, it has tested this level, and today it is testing that level again. And as long as we see these level stretch and going down, we can see even the levels of COVID lockdown levels, because it's recession that happened because of the recession, and Europe is heading to recession. But only one chance, only one chance. Let me just tell you that one. And if the oil price and gas prices decline faster than stock prices, then inflation can just stop without a real major recession. With a short one, we can just see. So this low level can stay, maybe like it can test 12k, but that level can be something like, yeah, something like yeah, the point. But if oil and gas prices doesn't decline so faster, so then we will just see that. Another important thing in Germany, this today, Habeck, the energy minister, and the economy minister, just together just told something important. They said emergency gas plan is ready, and if it's needed, we will just put into action. What is the emergency energy plan? Natural gas plan. If that happens, so they will use energy only for heating in the winter time, and then for the needs of cooking and for residential use. For example, you have a factory and then you are just like making chemicals, and on that factory you won't be able to use natural gas for industrial purposes, because they will say, first we need to focus on why they did say that this one, because at the same day Norwegian gas workers and then offshore gas workers started on strike. At the same day, Yamal and Nord Stream pipeline just completely halted. So we can say that compared to the same day of last year, Germany is having almost like a 60%, 70% less gas to their country. That means there will be a lot of trouble. And they were planning to fill the storages, but in this way they cannot do that. And winter will be so harsh for markets. That's the expectation. And then if the factory is shut down, then that means there will be no growth, there will be no earnings on that thing. People sell their stocks, they just return to gold, silver, or treasury bonds when the areas, the investment things which they feel more secure. That's the expectation. All right. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you. Have a nice day. Bye.